So this is a brief overview of index universal life policies. So here are the main advantages of index universal life policy. So there's cash value growth with downside protection, tax advantages, so it grows tax deferred and tax-free access to the cash value when you need it via policy loans, flexibility and permanent coverage. So you have flexibility with premiums. It's not locked into one specific premium like a whole life or term. Permanent coverage, so self-explanatory as opposed to term, which runs out after a certain period. And then living benefits as well. So if you become critically ill, chronically ill, or have other needs, you have access to your death benefit while you're alive. So that's the floor that Index Universal Life provides that's unique to their product. And it reacts to every geopolitical thing or worried about that because the floor is guaranteed in the contract. Now, this example is showing a cap. Most index universal life policies have a cap. The cap could be different depending on the insurance company you go with, but there are if the cap is a negative in your view. Besides the floor, this is the biggest advantage of the index universal life. So this is the wealth destroyer taxes. So all this is a mathematical summary of 25%, taxes earned at 33%, and tax deferred. After 20 times of doubling the dollar, you end up with 72K. At 33%, you end up with 27K. Tax deferred, you get over $1 million. So when they can't get as much gains as they could get in the market, the tax advantage is huge and dwarfs what you could possibly gain in the market, unless you're the next Warren Buffett or what have you. And then the icing on the cake with these is these are tax favored. So they grow tax deferred, and then you have access to them via policy loans tax free. So that and the floor are game changers for people's finances. Again, these are permanent policies. 99% of all term policies never pay out, usually due to lapses. But that's a staggering number. 99% of term policies don't pay out. This is perm premiums, so you could adjust the premiums lower if you have trouble coming up with the money or whatever, and you could raise premiums higher if you have extra money. The policy stays in force and the policy remains a policy. Living benefits. So if you become critically ill, develop a chronic illness, or terminally ill, you have access to the death benefits while you're living. And then financial access is huge as well. You get access to your cash value via policy loan. Just say you need X amount of dollars, you usually have access to about 80 to 90% of your cash value that you could borrow against, and you keep moving from there. So that was just a quick overview. Here's my contact information, site, email, and here's our phone number as well. Please like, comment, and subscribe. Thank you.